You're calm about silver right now. That's what should worry you. You don't feel rushed. You don't feel confused. You don't feel afraid. Silver feels familiar, steady, almost boring. And that feeling, the quiet sense of safety, is exactly where the trap begins. Because dangerous financial moments don't usually announce themselves with panic. They show up when everything feels reasonable, when nothing seems urgent, when you tell yourself you've already thought this through. You probably think silver is the simple asset, not flashy like stocks, not mysterious like crypto, not fragile like paper money, just metal, heavy, real, something humans have trusted for thousands of years. You might even feel proud of that logic. It feels grounded, responsible, adult. And that's the problem. Silver doesn't trap people by crashing suddenly. It traps them by letting them get comfortable with the wrong idea of safety. Right now, you may believe silver is slow, predictable, and defensive. You may believe it can't really surprise you. You may believe that even if you're wrong, you won't be very wrong. That there's no real downside to holding it patiently and ignoring everything else. That belief is more dangerous than fear, because fear makes people alert. Comfort makes people blind. Here's what most people never stop to ask. Safe compared to what? And safe in what way? Silver feels safe because it doesn't move fast. It feels safe because it doesn't dominate headlines. It feels safe because it doesn't demand constant attention. And over time, you begin to associate that calm behavior with protection. You start to believe that silver exists outside the system, above the noise, untouched by games, immune to surprise. But silver doesn't exist outside the system. It sits quietly inside it. And systems don't break loudly at first. They bend, they distort, they give false signals. They reward the wrong behavior just long enough to lock people into it. That's how traps work. A trap doesn't scare you away. It invites you to settle in. Think about what comfort actually does. It slows your thinking. It reduces your curiosity. It convinces you that you already understand the rules. When something feels safe, you stop watching it closely. You stop questioning the structure underneath it. You stop asking who controls the levers. You assume the rules are stable because they've been stable for you so far. Silver benefits from that assumption more than almost any other asset. Because silver's biggest risk isn't volatility, it isn't price drops, it isn't even manipulation in the way most people imagine it. Its biggest risk is misunderstanding. Most silver buyers believe they know what silver is. They think they understand its role. They think they've already accounted for its weaknesses. They think they're holding something simple in a complex world. But silver is not simple. It only looks simple when you ignore how it's priced, how it's traded, how it's promised to multiple people at the same time, and how confidence quietly replaces reality. And here's the uncomfortable part. The longer silver feels safe to you, the less prepared you are for the moment when that feeling stops matching reality. Because when silver finally forces people to pay attention, it won't do it gently. It won't come with a clear explanation. It won't give you time to adjust your expectations. It won't wait for consensus. The misunderstanding will already be baked in by the time the signal becomes obvious. That's why this matters now. Not because something dramatic just happened, but because nothing seems to be happening at all. Silence is where false confidence grows. If silver were openly chaotic, people would respect it. If it were openly dangerous, people would study it. But because it feels calm, people project their own assumptions onto it. They treat it like an insurance policy without reading the fine print. They assume that real automatically means safe. That assumption has consequences. And the most dangerous part is this. Once you internalize the idea that silver can really hurt you, you stop noticing how exposed you might already be. Not exposed to loss in the way most people think. Exposed to being wrong at exactly the wrong time. In the next part, we are going to talk about what most silver buyers actually believe. Not what they say out loud, but what their behavior reveals. And why that belief feels so logical that almost no one questions it until it too late. Most people who buy silver are not reckless. They're not gamblers. They're not chasing fast money. In their own minds, they're doing the opposite. They believe they're stepping away from risk. If you ask them why they own silver, the answers sound reasonable, almost comforting. Silver is tangible. Silver has history. Silver can't be printed. Silver isn't dependent on a CEO, a government promise, or an app staying online. Silver feels like opting out, and that belief makes sense. It's logical on the surface. You've watched currencies lose value over time. You've watched markets swing wildly on headlines that feel disconnected from reality. You've watched systems get more complex, more digital, more fragile. In that environment, holding something physical feels like common sense. Silver becomes the quiet alternative. Not gold, which feels expensive and distant. Not crypto, which feels abstract and unstable. Silver feels reachable, familiar, almost humble. You don't buy silver expecting excitement. You buy it expecting stability. You expect it to sit there unchanged while the world gets louder. You expect it to protect purchasing power slowly, patiently, without drama. That expectation is the core belief most silver buyers share, even if they phrase it differently. They believe silver is passive protection. They believe time is on their side. They believe that even if prices move around, the long-term story is simple. Money gets weaker, real things hold value, silver eventually reflects that. This belief feels logical because it's built from historical fragments. Silver has been used as money. Silver is physically limited. Silver does have industrial uses. Silver is cheaper than gold. Each piece is true on its own. Put together, they form a story that feels complete. But a story feeling complete doesn't mean it's accurate. Here's what rarely gets examined. Most silver buyers are not actually buying silver as it exists today. They're buying an idea of silver, a mental model frozen in time. They're buying the version of silver that lives in history books, not the version that exists inside modern financial plumbing. They imagine silver as a neutral object sitting outside human systems. But silver today is deeply embedded inside layers of promises, contracts, and expectations that didn't exist in the past. And most people never adjust their belief to match that reality. Another common belief is that silver is undervalued and therefore low risk. The logic goes like this. If something is cheap relative to history, it can't fall much further. That makes it feel like a one-way bet over long periods. But cheap is not the same as safe. Something can be cheap because it's ignored. It can be cheap because it's misunderstood. It can be cheap because the mechanism that sets its price doesn't reflect the thing itself anymore. Most silver buyers don't spend time thinking about how the price is formed. They assume the price is a natural outcome of supply and demand. They assume it's a signal of reality. They assume it's honest. That assumption allows them to relax. They also believe silver is honest because it's physical. You can hold it, you can weigh it, you can store it. That physicality creates emotional confidence. It feels different from numbers on a screen. It feels immune to distortion. But physical existence doesn't guarantee truthful pricing. A house is physical, but its price can still be wildly distorted by credit, leverage, and speculation. The same is true for silver. The fact that it's real does not mean the system built around it is. Most silver buyers don't think in terms of systems. They think in terms of objects. And that's why the belief feels so safe. You tell yourself you're not trading. You're not timing the market. You're not overthinking. You're just holding something real and waiting. That patience feels like wisdom. But patience only works when the structure you're trusting is stable. What almost no one asks is whether silver's S.I.N.W.'s calm behavior is actually stability, or whether it is a sign that pressure is being absorbed somewhere else, quietly, out of sight. Because when a system absorbs pressure instead of releasing it, it doesn't eliminate risk, it concentrates it. In the next part, we're going to look at that quiet concentration. Not in dramatic terms, not with conspiracy language, but in simple terms anyone can understand. The kind of risk that doesn't announce itself, but shows up when assumptions collide with reality. The quiet risk in silver doesn't look like a crash. It doesn't look like a warning headline. It doesn't look like something breaking in public. It looks like everything working normally. That's what makes it hard to see. Most people imagine financial risk as something loud and chaotic. Prices spike, markets freeze, news anchors panic. But the most dangerous risks build during periods of calm, when systems appear smooth on the surface while stress accumulates underneath. Silver lives in that kind of environment. The price you see is not the price of a single object changing hands. It is the result of a large web of agreements. Promises to deliver silver at some point, somewhere, under certain conditions. Most of the time, those promises never require the metal itself to move. They're settled on paper, rolled forward, or offset against other promises. As long as everyone agrees to play that game, the system looks stable. The quiet risk begins when people forget that these are promises, not the thing itself. Silver can exist in two forms at the same time, as a physical metal and as a claim on metal. Those two forms behave very differently under stress. But most buyers mentally blend them together. They assume that if the system says silver, it always means the same thing. It doesn't. A claim works perfectly until it doesn't. And the moment it doesn't, it stops behaving like silver at all. The danger isn't that the system is fake. The danger is that it's optimized for convenience, not resilience. It's designed to function when trust is high and expectations are low. It is not designed for a world where many people want the same thing at the same time. Here's where misunderstanding becomes costly. Because silver feels slow and boring, people assume there's no urgency attached to it. They assume they can act later. They assume that if something changes, they'll have time to respond. But systems built on rolling promises don't break gradually, they flip states. Everything looks normal, until it doesn't. And when that shift happens, the risk doesn't show up as a loss in the traditional sense. It shows up as a mismatch between what you thought you owned and what you actually have access to. This is why the idea of silver as passive protection can quietly backfire. Protection only works if it's available when you need it, and availability depends on structure, not intent. Most people never test the structure. They never ask what happens if too many people decide they want the physical thing instead of the promise. They assume that question is hypothetical because it has always been hypothetical before. But history doesn't repeat on schedule. It compresses. Another subtle risk is psychological. When something feels safe, people overconcentrate. They put more confidence into it than they realize, not because they're greedy, but because they're tired. Tired of complexity, tired of volatility, tired of watching rules change. Silver becomes the place where mental effort stops. That's not a criticism, it's human. But comfort-based decisions are fragile. They depend on the environment staying familiar. And Silver ES environment today is not the same as the one that created its reputation for safety. Industrial demand, financial demand, and investment demand are no longer separate worlds. They collide inside the same pricing mechanism. That collision creates tension, and tension doesn't disappear, it waits. The real risk is not that silver fails to protect you. It's that it behaves differently than you expect at the exact moment expectations matter most. If you believe silver is slow, you won't be prepared for speed. If you believe silver is predictable, you won't be prepared for dislocation. If you believe silver is independent, you won't be prepared for coordination. And if you believe silver is boring, you won't be paying attention when boredom turns into urgency. In the final part, we're going to connect these ideas, not to scare you and not to give you answers, but to show why silver aristos, the greatest danger, is not volatility or manipulation. It is confidence built on the wrong mental model, and why recognizing that difference changes how you think about safety itself. The danger with silver isn't that it's about to do something dramatic. The danger is that you think you already understand it. When people feel confused, they stay alert. When they feel confident, they relax. Silver has earned a reputation that encourages relaxation. Not because it's harmless, but because it feels familiar. Heavy metal, long history, quiet price action, all of that signals known territory to the human brain. But familiarity is not the same as clarity. Silver today exists inside a world that didn't shape its reputation. The systems around it have changed faster than the story people tell themselves about it. And when stories lag reality, decisions quietly drift off course. Most misunderstandings don't come from ignorance. They come from outdated knowledge. You don't misunderstand silver because you haven't done research. You misunderstand it because the framework you're using no longer matches the structure it operates within. You're applying old assumptions to a new environment. That's why the trap feels comfortable. The trap isn't silver itself. It's the belief that silver's role is fixed, that it will behave tomorrow the way it behaved yesterday, that time alone will solve the mismatch between value and price. Time doesn't solve structural tension. It amplifies it. The longer stress is absorbed quietly, the more sudden its release tends to be. That's not unique to silver. It's true of systems in general. Bridges don't collapse when the first crack appears. They collapse after years of looking fine. Silver's calm behavior encourages people to stop checking the supports. The real question isn't whether silver is good or bad. That's too simple. The real question is whether your understanding of silver matches the reality of how it's priced, accessed, and relied upon today. Because safety is not an inherent property of an asset. It's a relationship between expectation and outcome. When expectations are accurate, even risk can be managed. When expectations are wrong, even safe things can surprise you in ways that matter. Silver doesn't warn you when your expectations are outdated. It doesn't send alerts. It doesn't explain itself. It simply behaves according to the system it's embedded in, not the story you believe about it. That's why this conversation matters, even if you never change what you hold. Understanding removes the trap, not by giving certainty, but by restoring attention. You don't need fear to be careful. You need clarity. And clarity starts by noticing when something feels too comfortable. If this made you pause, not panic, but pause, that's the point. The goal isn't answers. It's better questions. Questions about structure, about access, about assumptions you may have stopped revisiting because they felt settled. Most people don't lose money because they were reckless. They lose because they were confident at the wrong moment. Silver doesn't need your trust. It doesn't care what you believe. But your decisions depend on how well your beliefs align with reality. If you want to keep thinking clearly about things that feel safe, calm, and familiar, especially when those feelings might be misleading, staying curious matters. And curiosity grows when you choose to keep listening rather than assuming you've already arrived.